it looks relatively better among its peers. That is, the Indian markets look relatively better among its peers. That's the word coming in from Morgan Stanley's Ruchir Sharma in an exclusive interview to CNBC-TV18 Shereen Bhan, the head of emerging markets and chief global strategist at Goldman Sachs, says that it's China and not Brexit that the world should be worried about. The reason, you ask? Well, here is straight from the horse's mouth.
What's really going on here is that this is a world badly disrupted by what happened in the 2008-2009 financial crisis. And there are a few trends which have been playing out since then. And Brexit is really the big manifestation, I think, of those trends. What are these trends? One, that we're seeing a global revolt against leaders everywhere in the world. And so, it's very popular to talk about the fact that Brexit is just about leave or remain in UK. But I think there's a bigger political picture here, which is the fact that there's a revolt against the establishment taking place across the world in many countries.
This in the context of the recent developments now, do you believe that the possibility of a global recession is higher today on the back of the Brexit?
Well, I'd say marginally yes, because my own sort of thing has been that recessions follow expansions just like nights follow day.
Yes.
So once every 8 years or so, we tend to have a recession. So we should not be that surprised to get a recession. But I'm not that sort of convinced that what's happened in UK and the contagion of that for the rest of European Union may cause a recession, partly because these economies haven't come to matter that much for global growth. Because they've been growing so slowly, they haven't contributed that much to global growth. So any changes in their economic growth rates don't have such a large impact. As you know, my bigger concern over the last 12 months has been China.
Yes.
Which is the fact, and this is very important, because even if you look at the Indian market, the sensitivity to what happens in China today is much greater than, let's say, the sensitivity to what happens, let's say, with Brexit. When China was in a free fall in the late summer last year, or then again earlier this year, the Indian market and had a much stronger negative reaction compared to what has taken place in the first few days after Brexit.
So since we're talking about the markets, Ruchir, let me ask you about what the outlook is in the context of the recent developments, specifically as far as India, because there is one camp that believes that we're largely insulated, that the story for India is looking good, we're an island of prosperity, if I could call it that, or an oasis in the desert, as somebody else on the channel pointed out. But how would you look at India in terms of valuations, in terms of the macro stability, and what that then bodes as far as the markets are concerned?
Yeah, this is favorite sort of sell-side trope of looking at valuations. One thing which I'm convinced about is that valuations just don't tell you anything about how a market's going to do. We have looked at it across the emerging market universe, and the valuation of one country versus the valuation of another tells you absolutely nothing about what's going to happen in the future. So that's a very poor guide. What does tell you about what's going to happen in the future is which countries surprise on the upside in terms of economic growth, and which countries disappoint on the upside in terms of economic growth. That is the single most powerful predictor of returns over the next 3 to 5 years. And I think in that regard, as far as India is concerned, I agree with the general view that India looks relatively better compared to everybody else.